Did you know that although Tesla's stock's price is still dropping, the dip is not entirely due to market performance? The EV market has always been struggling, and this has not been a problem for Tesla alone, but several other EV makers as well. The EV market's been struggling, and this has not just been a problem for Tesla alone, but several EV makers as well. EV delivery has reportedly declined in China, with Chinese electric vehicle makers citing slower growth in deliveries in November, with some even seeing significant declines as the market continues to be hit by a macroeconomic downturn. Could this be a sign of bigger woes for Tesla? Long-term investor Gary Black has something to say. Hey guys, welcome back to Tesla Tomorrow. Gary Black is a strong Tesla bull who has, for a long time, shared his opinion about Tesla's valuation and why he believes that the company's stock will perform better in the future. The Tesla stock investor, as well as managing partner and co-founder of Future Fund, recently stated in a tweet that Tesla's 2023 earnings estimates have fallen just 5% over the past 3 months, reflecting China demand and production cuts, while the company's stock price is down about 51% as of late. Black has cited that there is a sharp compression in Tesla's PE due to the recent Twitter circus, and without any proper measures, this could affect Tesla in more serious ways. What does Gary Black think about Tesla stock? Keep watching to find out, but before we get on with it, don't forget to like and subscribe for more content just like this, and to keep up to date on everything going on with Tesla. According to Gary Black, unless Elon Musk changes his mind on stepping down as Twitter CEO, then it may seem that all the bad news is on Tesla stock. The Tesla investor in a recent tweet described various factors that could possibly affect Tesla's stock price in the future. Gary Black stated that for Tesla's stock price to recover from the dip, Elon Musk can't sell more Tesla shares until the fourth quarter earnings are released towards the end of January. Musk recently sold about 22 million Tesla shares in 29 separate transactions, worth roughly $3.6 billion. Last month, the CEO of Tesla revealed that he had sold 19.5 million shares of the car company worth $3.95 billion, just days after completing a $44 billion takeover of Twitter, and also stating that he was done selling. Musk had previously said that he was no longer selling Tesla shares, but the Tesla CEO still sold more shares, and it is uncertain whether or not he can continue to sell them, especially as major changes continue to happen with Twitter and the need for more funds and attention increases. During Musk's initial days as Twitter's CEO, the CEO stated in a meeting with Twitter employees, said that for the company to reach a level of significant growth, there is a need to build its revenue and bring in more cash than it spends. He added that without this, there could be a massive negative cash flow, which may result in bankruptcy. Seeing that Musk is dedicated to his new company, Tesla is not totally safe and may continue to see less of the CEO's attention and dedication. According to Gary Black, selection of a new Twitter CEO in place of Musk could now be a catalyst for Tesla's stock price. Musk stated that when he took over the social media company earlier this year amidst concerns from investors, and ever since, that the automaker's stock price has actually experienced only a few surges, with multiple drops from time to time. Not only has this new venture caused Musk to sell several Tesla shares, but it's also taken a percentage of his time, leaving less time to attend to Tesla. However, Musk may be starting to see the detrimental effects of his new business on Tesla, at least as far as he continues to be Twitter's CEO. The Twitter owner recently posted an informal poll on the social media platform asking users if he should step down as the head of the company. The poll, which closed some hours later, ended with a majority of respondents, about 57.5% of them, calling for the billionaire to leave the post. More than 17.5 million users actually voted on this poll, meaning that more than 10 million users no longer wished for Musk to continue leading Twitter. Although Musk agreed to abide by the results of the poll, it is unclear whether or not he's actually going to do it. Gary Black also believes that an increase in Tesla's output can have a significant impact on the company's stock price. According to him, if Tesla's factory in China is able to increase production volumes to around 10,000 cars per week, then Tesla's Q4 consensus deliveries of 430,000 cars may be achievable. Tesla delivered a record number of vehicles in November from its Shanghai Gigafactory, owing to its expanded capacity and price cuts. Although demand is a major concern for Tesla investors, this should not be much of a problem for Tesla. In a series of follow-up tweets, Gary Black stated that he is surprised that Tesla's board of directors stood by while Elon Musk spent the bulk of his time at Twitter and not Tesla after the deal. He added that he believes that Tesla executives finally pressured Musk to give up his role as Twitter's CEO or risk being sued for not acting in the best intentions for Tesla, adding that this could have prompted a recent poll by Elon Musk on the platform. Black also stated that at the moment Tesla shares are way too cheap, selling at a 2-year record low. Year to date, Tesla shares have been down 55%, and the stock has raised about $225 billion in market value since Musk closed his deal to buy Twitter in late October. Since then, it's been a series of never-ending drops in Tesla's stock price. However, despite this, Gary Black still sees a bright future for Tesla. Black had actually had a previous call with American investor Ron Barron after he predicted that Tesla will sell 20 million cars at a $50,000 average selling price, with a 30% operating margin. According to him, this will give $300 billion in operating income, with a 15 times PE ratio, which equates to a $4.5 trillion valuation. In this valuation, Ron Barron excludes Tesla's robotaxi, bots, batteries, and everything else except EVs. Speaking of Barron's estimates, Gary Black stated that Ron Barron's $4.5 trillion valuation for Tesla over the next decade is realistic, adding that this prediction is in line even though they are both analyzing it in different ways. He stated that Barron's Tesla valuation of $4.5 trillion in a decade is in line with mine by 2030, although we come in at different ways. I project 10.6 million Tesla EVs will be produced in 2030, EPS of $42. I assume a 30 times PE in 2030 equates to $1,260 per share, approximately $4.5 trillion. According to Gary Black, Tesla is well poised for increased revenue in the future. However, this is dependent on a number of catalysts, which could over the next 12 months propel Tesla's stock price forward. The Tesla investors cited a wide release of Tesla's FSD version 11, the Cybertruck launch, a $10 billion share buyback in the first quarter of the year, and the production of a low-cost EV in 2023 as possible boosts for Tesla's stock price in the coming months. He added that the construction of 2 to 3 new gigafactories and the endorsement of a new credible CEO for Twitter are other possible catalysts. Musk had stated earlier this year that Tesla plans to expand its network of gigafactories as the company aims to meet its goal of building as many as 20 million EVs by the year 2030. He added that Tesla could build probably at least 10 or 12 gigafactories with an output goal of between 1.5 to 2 million units per factory. Gary Black has stated in an open letter to Tesla's board of directors earlier this year that since Tesla's shares were valued at its lowest forward PE ratio, the company could consider an aggressive multi-year stock buyback of at least $10 billion. He added that by doing so, Tesla can rake in returns and consequently drive up the value of the stock. However, while Gary Black believes that these catalysts can help Tesla's stock price soar in the near future, he stated that Tesla still faces multiple risks going forward. According to the Tesla bull, if Elon Musk U-turns and doesn't accept the results of his own Twitter poll, then his brand and that of Tesla could be negatively affected. Black stated that not much is known about the Twitter circus and how it's affected Tesla EV orders, but while this may not concern investors in the short term, it may have long-term negative impacts on Tesla's demands. Do you think so? Let us know down below, and don't forget to tell us what your valuation of Tesla's stock is. And if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.